Good evening, good morning, good afternoon to everyone in the world. Welcome back to another episode of the Coffee Hour. All right, we got a lot of news to cover. Honestly, the stream is probably going to be very Bitcoin, crypto, Ethereum heavy. It seems like there was just a ton of stuff that was coming out. As some of you may know, there's a lot of 13F filings going on. And two of the holdings I hold is MSTR, MSTW, and BMNR. So I like to cover that stuff whenever I see, news come out. And again, there's still fallout from, 2 weeks ago when crypto, Bitcoin, everything was selling off, and there's still a lot of FUD out there. There's still a lot of FUD, fear, doom, and gloom, Ponzi scheme, it's going to zero, blah, blah, blah. But it looks like a lot of smart money, a lot of institutional money, a lot of big money is moving into these assets, right? So it looks like scared money, paper hands are getting shaken out. The tourists, as Michael Saylor likes to call them, are getting shaken out. So we'll be covering a lot of that. So I'm hoping today's stream will be fun, and I'm guessing X is also having some more streaming problems. I know YouTube was having some issues with loading the front page. So we'll see if X will load the video. So let me actually double check that before we get into it, because I got to figure out what is going on with X. Like X just does not seem to work, or like it doesn't save my videos either on my homepage, which is kind of a bummer. So I have to post after this stream, which I guess is not a big deal. Okay, guys. All right, let's get into it. Okay, let's go to boom. All right, does that work? Boom, there we go. All right, so anyways, as always, welcome back, and we're going to be covering a ton of stuff. There's going to be some videos, so I apologize if, like a lot of this is going to be fresh for me. A lot of this is going to be like brand new for me. I haven't watched every single video, so bear with me. All right, I'll offer my commentary, kind of my thoughts as we go along. All right. And of course, always, in the chat, you guys can place your thoughts as well. So I see we have Super Straight Guy. He says, I have arrived, and I have arrived as well. Welcome. And we have Skeptic in the chat. All right. So appreciate you boys joining. Let's get it going. All right. So here is FinViz. This is what we use to just see how the, S&P 500, how the broader market kind of played out for the day. Not too bad, actually. I mean, if you're looking at all things considered, I mean, it's not too bad, right? I don't know. I'd say it's maybe even, right? But we do have Apple pushing up. We had NVIDIA push up, Broadcom push up, Palantir move up a little bit. We had Google, going down, Microsoft, Tesla. So some of the Mag 7s, got mixed reactions. We have, let's see, we have financials doing pretty well. All right. So financials did really well. Software applications obviously taking a beating like always. And then we have information tech, computer hardware, let's see, asset management. So your Blackstones, your BlackRocks, your KKRs, your Apollos. Let's see, financial insurance. It's all right. Industrials doing really well. Again, the great rotation away from tech. And then industrials, of course, is doing well. Well, this was aerospace and defense industrials, and this is specialty industrials. So doing well. All right. So, hey, we got Wolf in the chat. Hey, good morning or good evening, wherever you are. Okay, so let's move on. So S&P 500, again, didn't trade terribly, right? Pretty much flat. 10 basis points in the green. I'll take it. We're starting off the new week. In the morning, it looked like we had a pretty decent sell-off. And then towards the end of the day, $600 billion worth of market cap came flooding back in, right? Towards the very end. Of course, that's how it usually plays out in the morning. There's always, they call it the amateur hour. That's when there's a huge flush, usually a huge flush. And then as the traders start to go to lunch, as they start to leave their desks, then, retail starts to hop back in, and, then it kind of just does whatever it does. So a lot of money is moved around in the first, couple of hours of the day. But for the S&P 500, year to date, down 22 basis points, all right? Not doing exactly very, very hot, but also not doing terribly as well. Okay. iShares expanded tech software ETF. All right. I like to just cover this as always, because this is an expanded, technology ETF. So it's not going to have, some of those Mag 7 names. So we could just take a look at what they're doing. So again, still going down 2.19% in the red. This is, the SaaS apocalypse, the disaster that is going on with software services. And it's because a lot of, investors are just rotating their money out of software and tech, and they're going into, more of these, consumer utilities. You have real estate. We'll come back to this, but yeah, that's where investors are rotating to. They're rotating away from software. There's still this threat of AI taking away a lot of this, a lot of the moat that some of these software companies have, right? Software companies are also laying off a ton of people because they can replace them with AI. Instead of having teams and teams and teams, departments of developers, now you can just have a couple of, probably subject matter experts, maybe senior team leads doing all the development on something like a Claude, or, maybe some other type of, software developer type of AI, right? Open, ChatGPT, Gemini, etc. So that is happening, guys. That is definitely happening. So let's see what Bitcoin is doing. Not above 70. All right. Not above 70. Had a pretty decent sell off in the morning, and then just continued to grind lower. Again, I'm holding a lot of dry powder. I want to deploy some money into Bitcoin. We're going to be covering Bitcoin a lot in this stream. So apologize if it starts to get a little boring. But yeah, Bitcoin was probably the biggest news that I was finding today. Well, it was like Bitcoin, MSTR, BMNR, and we have some macro news as well. And I do apologize. I am feeling a little under the weather. So if I'm not super ecstatic, moving around a bunch, etc., I am, starting to feel a little under the weather. The weather is changing out here. So, as it goes, the seasons. All right. So anyways, Bitcoin is down, as we can see here. And I still think we're going to be going lower. I really do think we're going to be heading down to about the $55,000 range. Again, there's a lot of people calling for, 34, 35,000 a coin. And if you, are any, believer in history, if you're to do a 90% decline from all-time highs, you're looking at about $12,000 a coin. Can that happen? I have no idea, right? I have no idea. We saw an almost 80% drawdown here, right? From 47 down there. So I have no idea, guys. But there's just so much narratives out there. Some believe that the 4-year cycle is dead. Some believe that this drop we're having now with Bitcoin is proof that the 4-year cycle is still alive and well, et cetera, right? Bitcoin is not having the best year to date. It is still down 22.7% in the red. All right. So we have gold also getting flushed out today. All right. Down 3.12%. Year to date, it's the only green asset, right? Year to date up 3.53%, whereas silver continuing its sell off just for the day, down 4.8%. Okay. Year to date, it's barely breaking up, right? It's barely breaking a percentage point. And again, there was all this very, very euphoria for silver, right? People going into silver, just saw that parabolic move over the month. And then, of course, institutions started dumping. They started shorting silver positions. There's all this market manipulation happening. And then this is what we're left with, right? A negative, almost close to negative 40% decline from its all-time high, or from its previous high, I should say. So silver, again, if you're bullish on silver, some of the reasons to be bullish on silver: industrial metal. We have solid state batteries coming in the future that are going to be using silver. There's a lot of battery technology that's going to require silver. There's a lot of technology that requires silver. There's just a lot of use for silver. Okay. So even though the price is going down, and, I'm going to just say it, but paper hands are getting, are getting out. They didn't know why they were buying silver, or they were just buying it because they saw this. Some of the reasons to buy silver, fundamentally, like I mentioned earlier, is for the industrial base, right? The industrial uses for silver. There is still a very big demand for silver and not enough silver to go around. So, people really should consider that, right? Consider that. If you got in at the top and now you're down somewhere down here, a 40% loss or haircut, don't freak out. Okay. Don't freak out. If you're bullish on the metal and it's because of the fundamentals, right, then hold it, right? What's the worst that can happen? If it goes down a little bit further, I get it. It's scary. But again, look at the bigger picture. Look at the broader picture between countries, right? There's still a massive demand for silver. That is not going away. There's banks that have pretty much emptied their silver vaults because everyone was buying the stuff up. So silver is still very much in demand. Don't get silver or paper silver mixed up with physical silver demand. All right. The price will reflect, the demand will reflect eventually in the future. Gold has been going down. I haven't found any catalyst really for why gold has been coming down like this. I mean, this is a pretty crazy drop, right? The only catalyst I could find had to do with geopolitical risk, right? Had to do with geopolitical risk. We have, basically two super carrier groups out in the Middle East. The United States does, the United States Navy. And it looks like negotiations with Iran is going very well. And whenever geopolitics, the uncertainty starts to clear up and things get a little more certain, things get a little more safer, usually gold tends to come down. That's the only thing I could find regarding this. I haven't found any other catalyst other than that. So that is at least my, kind of take on why gold has had this really big dip really big dip. And again, it's because uncertainty, right? A lot of geopolitical uncertainty. That's bullish for gold. That's bullish gold, bullish Bitcoin, right? Whenever you have a weak dollar, a weak US dollar, that's bullish gold, right? Whenever you have, market sentiment is being, we're going to be printing a whole bunch of money, inflation, blah, blah, blah. Well, that's bullish gold. Okay. So again, my opinion is that the reason for this drop and the reason for the continued kind of flatness for gold is just things are starting to level out, right? Again, there was still a really large euphoria for gold. Everyone's getting in, piling in, and, of course, it sold off along with silver. So, but the difference between gold and silver, gold is a more of a store of value than it is, an industrial metal like silver. So something, again, to keep in your mind, keep in the fundamental pocket. All right. So real quick, I just want to cover this. This is the sector rotation. All right. We cover this a lot. And again, you guys can see real quickly, there's still a continued rotation out of information, or not information. Well, if we look at the 5 days, there's still a continued rotation out of technology and financials into utilities, real estate, materials, and energy. All right. So just for the 1 day, just for the day, it looks like utilities, real estate, healthcare, materials had a pretty good jump up. All right. So that is pretty much the great rotation that's happening within the broader market. Investors are just getting out of those names of yesteryear that were all the hype, the AI trade and everything else. Any of the names associated with that, they're all just getting out of that and moving towards, I don't want to call them safer assets, but probably real assets, right? That's probably the proper term for these types of ETFs or these types of stocks. They're real assets, like a utility company, an apartment complex, a mall or whatever, an office building. I wouldn't invest in office buildings, to be honest. Healthcare is always going to be important. So just wanted to cover that. I think we have not touched this in quite some time, so I definitely want to cover this in this stream. This is the money market fund or money market fund assets, right? And this is coming from the ICI. This right here is telling us that there's currently $7.7 trillion in money market funds. Okay, $7.7 trillion. So this is money that could be used to deploy, across a market. This is money sitting on the sidelines, right? This has been monitored pretty much week to week all throughout last year, right? There's a lot of people who flocked to money market funds after, the tariff debacle, and they stayed in money market funds all the way through 2025, not jumping in, expecting a huge decline, a huge market pullback, et cetera. And it just never materialized, right? Even now, if you look at the S&P 500, it's still not even that bad. Now, individual names are getting slaughtered. Don't get me wrong. Names like Palantir, for example, are absolutely getting wrecked. Names like Robinhood are getting wrecked. But the broader market, funds are just rotating out of these names and into different sectors. Okay. But, $22 billion was deployed or taken out of money market funds, but it's still sitting at $7.7 trillion. So that to me is telling me that there's just a lot of money on the sidelines. I don't know. That to me is bullish. For some reason, that to me speaks bullish on the market. Even if we were to have a decline of some sort, some people are saying we're going to have like 1,000-point decline on the S&P 500. I don't know. You take that with a grain of salt. You could do your own research. But you have all this money sitting on the sidelines, right? And if that money was to get deployed, into either, it doesn't matter what it gets deployed into, whether it's, passive indexes or, single individual stocks. I mean, that's still going to be bullish. That's still going to have the stock market rise. Okay. And there's still a lot of, and I'm surprised here. Actually, I guess it's under materials. Yeah, I guess it'd be under materials. But anyways, just wanted to cover that because we haven't covered that in quite some time. All right. So now we're going to move on to kind of the Bitcoin stuff, the Ethereum stuff. This is going to be a really kind of clip heavy segment. I have not watched any of these clips at all. Like, this is all pretty much new to me. Okay, guys. So I apologize if it's going to get a little long in the tooth. But I will provide my commentary, where I can fit in. All right. But here we go. All right. So for strategy, they acquired another 2,400 Bitcoin at an average cost of $67,000 a coin. All right. So finally, they were able to buy the dip, like the actual dip. Because last week when they made a purchase, it was about $78,000 a coin. So they kind of missed that dip. But this time it looks like they were able to get it. So, that's good. It looks like they used, well, it doesn't say here, but I would probably assume that they probably sold common shares. Let's see. Yeah, I think it was, well, I don't know where it's at, but I wouldn't be surprised if Michael Saylor hit the ATM or if he took it away from Stretch to buy more Bitcoin, right? But yes, strategy is still continuing to buy more Bitcoin. Okay, this is really interesting right here. And again, this is the whole thing with stupid money. I'm just going to call it what it is. Stupid money. People who sell out at the worst time, forgetting all the fundamental reasons of why they got into something like a Bitcoin, right? And then I swear it is a pure psyop that happens on X every time. So when Bitcoin was dropping, that's when all the trolls came out, right? Everyone's saying, oh, Bitcoin's going to zero. We're, Bitcoin winter. It's going down to $12,000 a coin, blah, blah, blah. The whales are getting out. No one's buying this junk. Mstr is a Ponzi scheme. It's a scam, blah, blah, blah. Sailor this, Sailor that. Strategy, Class A common stock, strategy, Class B common stock, right? It's always some type of FUD, fear, doom, and gloom, right? But if you take a step back and you look around, you'll find that huge institutions like Jane Street increased their holdings in IBIT. All right. Increased their holdings in IBIT. All right. So you'll never guess who bought the second most IBIT in Q4. And that was Jane Street. Now, did they increase it also in this period, throughout this volatility? Probably so. We'll find out in the next 13F filing. But again, guys, like, you have Jane Street, Morgan Stanley, BlackRock, everybody, all these big institutions just buying up IBIT like it's going out of style. Right here, BlackRock, 12,000 shares or 12 million shares. Morgan Stanley, 13. Here's their latest changes. I hope you guys could see that. Yeah. So anyways, I mean, this is the thing. And there's a lot of controversy about this L'Aurore Limited company. It has no website, nothing, right? It's like fresh on the scene. And they just came out the cut and just bought 8 million shares of Bitcoin or IBIT, right? Some are speculating that this is a Chinese company or a Chinese shell company because, Chinese companies can't buy Bitcoin. Bitcoin is pretty much banned, quote unquote banned in China. So this is, kind of like a shell of a company. That's at least speculation. There's nothing proven that is the truth, but that's what I saw about L'Aurore. But again, guys, like, big money is moving in while stupid money was getting out, scared that Bitcoin is going to go to zero. So that's why you got to be careful when you're on X, on YouTube, Discord, doesn't matter where, right? Facebook, Instagram, Threads, don't care. You got to be careful with all of the FUD and all of the bots, especially the bots, because I really do believe it's big money that starts these psyops and convinces people to sell out. I know it's a little conspiracy theory, tinfoil hatty, but I believe that is the absolute truth, right? There's someone that's pushing all these buttons to basically have retail dump, and then these big guys will hop back in at a lower price. So just wanted to cover that. Robinhood Ventures, this is a big deal. Okay, Robinhood Ventures just launched. This is IPO. I believe the ticker is RVI. We covered Robinhood Ventures last year when they were talking about it. You know, they were talking about they want to launch this this IPO for Robinhood Ventures, and where they can invest in private companies. Companies, you know, I'm not saying these companies are in there in the ETF or in the stock yet, but you know, private companies like Anthropic, like Stripe, like OpenAI, SpaceX, you know, these types of companies. I know these companies are going public later this year, but I'm just using them as an example. But yes, with Robinhood Ventures, you'll have, you know, kind of proxy access to these to these private companies. And the thing about private companies is you cannot invest in these unless you're an accredited investor. Okay. To be an accredited investor, you need to have at least $1 million in net worth, not including your primary residence. You need to make at least $200,000 a year consecutively for 2 years, with the current year, you know, with the expectation that you'll make, you know, 200K. Or the last one is you need to have like special designations, right? Special certifications, you know, in the finance industry. But yes, when you invest in this product, right, this is going to give you access to these private companies, right? This is a proxy for investing. Now there is, you know, some things about this. They don't really talk too much about it, right? Like, actually, I didn't even see this button here. Let's click it, see what happens. We're not going to watch the video. So you can get like access to Databricks. Let's see. Okay. All right. Well, anyways. So I saw this post from Amit Investing. I really recommend you guys check him out on YouTube. I like his commentary. I like his you know, his X posts. But he says they're raising $1 billion as it IPOs next week. All right, we'll buy, sell, hold stakes in leading private companies. All right, retail will be able to buy with zero accreditation needed and have liquidity to sell if needed. That's the one big part about all of this. You know, like in private, they call it private placement memorandums, right? This legal documents you got to sign in order to invest in these, you know, these private companies or these private investments. You can't just get your money out. Okay, that's one of the biggest things. That's one of the biggest drawbacks of investing in these private companies or these private deals. You can't hit the sell button and get your money out. You have to wait for the deal to either go full cycle or for it to, you know, go IPO or for, you know, something for it to get bought out or whatever, right? So you have to wait for things to happen. With this method, you know, you can invest into JVI, right, or RVI, Robinhood Ventures, with no accreditation, and it's highly liquid. So if you put in, you know, $500, it's going to be spread across all these private companies. And if you need to sell, you know, let's say there's a gain or whatever, you can sell and not have to worry about, you know, waiting for a redemption period. Okay. For some of these private funds, usually there is a redemption period. You know, you have to wait, you know, 3 months, sometimes 6 months, sometimes a year. I myself had a redemption period go on a full year before I was cashed out. So believe me when I say that, you know, having access to private companies through a stock is actually pretty cool. You know, this is probably the closest thing you'll get to private credit, to a private credit fund. So anyways, there's going to be a 2% management fee on Robinhood, which is, I mean, it's kind of high, not going to lie. You know, I've only seen, you know, 1 basis point, you know, a full percentage point on most, you know, ETFs or whatever. But if they're going to be charging 2%, I suppose it's significantly lower than traditional SPVs that take 20%. I'm going to have to take his word for that. I don't know that for a fact. You'd have to compare this to probably something like, you know, Blackstone, BlackRock, et cetera, or just private placement, you know, funds, private placement investments. So anyways, this is bullish again for Robinhood. So for anyone investing into Hood, I again still hold my HOW shares, you know, from Roundhill. So this is really cool for Robinhood. I really like this, and the reason is because they're continuing to push the bar, right? They're continuing to innovate. As someone had mentioned in the Discord, they're continuing to innovate. They're not just sitting still, right? They're trying to become the #1 premier finance app, right? Finance platform where you can get a bank, you can get or a bank account, you can get a mortgage, you can invest in private companies, you can invest in, you know, stocks, crypto, etc. You get a credit card, right? Robinhood Gold. there's just, and they have their robo advisor as well, Robinhood strategy. They also have, of course, the prediction markets. All right, so this, I really like what Robinhood is doing. Again, they're continuing to push that envelope farther, trying to offer new products and services. I'm pretty excited about this fund. I don't think I'll be buying it right off rip, right off IPO. I would like to see, kind of more about it and how it plays out over probably the next couple of months. And again, with these IPOs, as we have seen in the past, usually there's a really quick rip to the upside and then, a sharp decline. So I'm going to wait for that, and see what happens. But if you want to swing it, maybe this might be something worth swinging. All right. So I did want to cover that. I thought that was really important, especially because, this is the first product of its kind that I know of that offers private, proxy investments, right, to non-accredited investors. You had crowdfunding. Crowdfunding was a big deal. You usually see crowdfunding in like the REIT space. So things like, Fundrise, which is a big real estate investment trust platform. You'd have crowdfunding where you could put like $500 and you get access to like a bunch of real estate. Same thing for like Realty Mogul. You can check them out as well. I'm not promoting them, not sponsored by them, but I have invested with them in the past. All right. So, yeah, let's cover this right here. Let's cover this right here. I had not even had a chance to look at this video. So this is actually Coinbase's John D'Agostino on what's behind the recent crypto market volatility. So again, this is going to be a very crypto heavy kind of stream, guys. I apologize. It just took up my entire feed. Like it was nothing but crypto, Bitcoin, BMNR, MSTR news. And we had just like a little sliver of Meta and Nvidia. So we'll be covering the Meta Nvidia piece a little later, but let's listen in on this clip.
Prices, it is off of its lows from earlier this month, but still down more than 20% this year and closer to 40% from its all-time highs. Joining us right now is John D'Agostino. He is Coinbase's head of institutional strategy. And John, what's happening? What would you describe for the setup for why we've seen this decline?
So it's a setup we've seen multiple times before. And not to go back to history again, but you don't even have to go back 10 years. You go back 10 years, the returns are just silly, right? If you held the S&P for 10 years, you made about 2.5 times your money. If you've held gold for 10 years, you made about 3 times your money. If you've held Bitcoin, you've made about 11 to 15,000 times your money. But even if you go back to 2022, in 2022, we had Bitcoin trading at around 15 to 20,000. We had an SEC that for the first time in my memory had picked a specific technology and said we're going to try to kill that technology. And we had blow-ups that we've never seen before, Terra Luna, FTX. Fast forward 3.5 years later, about the time it takes for a Paramount deal to close, we've got $65,000 to $70,000 Bitcoin. We've got a friendly administration.
That's what I was going to say. With a friendly administration, it's surprising to see a pullback back like this. And I thought we were getting to the point where Bitcoin prices were going to be more stable.
Well, I think we are, because volatility is decreasing. Yeah. So on a notional basis, I know it seems like a larger drop, but on a percentage basis, we are seeing consolidation of volatility, which is what you would expect. Mm-hmm. Again, I've said this before on your show, there are certain assets like commodities, crude oil, gold, others, that trade in this way. Mm-hmm. Growth tech stocks trade in this way. They're momentum trades. They have so much potential upside that when they start moving up, they get a lot of speculative activity.
It's just that you can't use this as a currency when it continues to fluctuate.
Well, a lot of people do use it as currency. People use gold as currency. I agree with you, that's not the predominant use case right now. It's more store value. But there are millions of shops in the US and abroad that do take it as a currency. It has multiple use cases.
But then you feel like an idiot if you buy a pizza with it and it takes off.
I guess, well, you feel like an idiot if you buy pizza at 500. Yes, you feel pretty smart if you buy pizza at 123,000. But look, my preferred use case is store value. I just got off a plane. I spent 2 weeks in Hong Kong and UAE. I sat in front of about 130 institutional investors, and I asked them, has the price volatility changed your thesis? Mm-hmm. Not a single one raised their hand.
You guys heard that, right? Let's back up if we can. This is such a key part. All right. So he went to a big conference and he's talking to all these large financial, banks, institutions, funds out there. Let's listen to this part one more time.
In Hong Kong and UAE, I sat in front of about 130 institutional investors, and I asked them, has the price volatility changed your thesis? Mm-hmm. Not a single one raise their hand. What they're doing is they're using their national resources. In the case of the Middle East, it's capital from selling fossil fuels to us. In the case of China, it's huge net national trade surpluses. And they're buying and holding this asset. They're also investing very, very heavily in using blockchain as part of their infrastructure.
Last week on the earnings call for Bitcoin, your CFO said that she noticed investors were actually spending more, buying more on the way down because it's cheaper. But that's not the case of what you heard in UAE or China. They're doing this regardless of what the price is, and they haven't changed anything.
So the institutional investors tend not to move in via momentum trades. Net buying exceeds net selling on our platforms. That's a good sign. I wouldn't say institutional investors jump in on buy the dip type trades. They consistently invest. Again, some of these institutional investors, they're investing through building mining capacity in their region. So they're building it as opposed to buying it. But they've been consistent over the last 5 to 7 years in their long position.
Is there a technical level that is a concerning level? I hear.
All right, we're going to end that right there. All right, so you guys heard it. This is from Coinbase themselves saying that, again, these institutions overseas, not just the United States, are still looking at Bitcoin and they're still buying Bitcoin. Okay, so again, this is my opinion, very bullish, but X and all the opinions out there will have you believe that you should sell because it's going to go to zero, right? So you have to have a fundamental conviction for Bitcoin. It is a rocky ride. So I want to move on to back to Michael Saylor and strategy. All right. Again, guys, I apologize. This is going to be a very clip heavy episode. I will just, again, add my commentary as we move forward through this. This is all brand new to me. I have not watched any of these clips. So this is, so this is going to just be my thoughts off rip, all right, off the fly. So let's listen in.
Saylor. Michael, welcome back to the show.
Yeah, thanks for having me.
Can I first just get your gut answer as to whether we are in the first stages of another extended crypto winter?
We are in a crypto winter. This is the 5th major drawdown of Bitcoin in the 5 years since I've been in the marketplace. This is a much milder winter than previous winters. It'll be shorter than previous winters. It's going to be followed by a spring and then a glorious summer. So don't fear.
Why do you feel so confident saying that?
The banking sector is supporting Bitcoin much more strongly today than we were 4 years ago. We've got the formation of digital credit networks, banking credit networks. We've got the support of the administration. We've got a Bitcoin president. We've got 12 cabinet members that are pro-digital assets and pro-innovation. And every single month, you see new advances in the digital asset space, which are bringing...
I broke it, guys. I broke it. I'm trying to increase the quality
extraordinary productivity to the economy and a lot of capital.
Okay, sorry about that, guys. I'm trying over here to increase the production value over here, making this a little more clear for you guys. Hold on.
To the asset class.
You're absolutely right when it comes to the banks who have finally started accepting and embracing it. I mean, you could go back, of course, to BlackRock, not a bank.
Oh my God, my internet's so bad. Okay, let's do 360p. All right, this is potato quality. Let's try it again.
But BlackRock, the world's largest asset manager, finally pushing hard to get a spot Bitcoin ETF in play. IBIT and the rest have done, depending on what Bitcoin is doing, up, down, all around. But let's get to strategy, because your company's average acquisition price for all those Bitcoin is around what, 76,000? Can you just clarify that and make sure that I'm right on that?
Yeah, in that range.
Okay, that is materially above current market levels. And that has created unrealized, albeit unrealized losses on paper. But at what point, Michael, does this disconnect between cost basis, what you paid, and the current market price become a problem for you and your shareholders?
Yeah, one of the misconceptions people have is that number really matters. The most important thing to understand is that we bought most of that Bitcoin with equity, not with debt. So if we had borrowed money to buy the Bitcoin, it might be an issue. But we were the largest issuer of equity in 2024 in the entire capital market. We were the largest issuer of equity in 2025 in the entire capital market. I think the company raised $55 billion of capital, but only 8 of the $55 billion was debt. So if we did buy the Bitcoin at a little bit higher than the current level, we sold equity that it was a massive premium to the Bitcoin at the time that we bought it. So the company's balance sheet's a fortress. We're fairly...
All right, so you guys heard that, right? Like Saylor is saying that there's really no debt on the Bitcoin that they own because they, again, hit the ATM, right? The ATM button. They diluted the MSTR share, common stock, right? So that was the primary method for them to raise money to buy Bitcoin. There's no debt behind issuing or diluting shares. And then, of course, he came out with the other products, Stretch, Stride, Strike, and Strife, and one other one. So he came out with those products. He raised, roughly, between $1 and $2 billion on each of those, and he put that money into Bitcoin. Again, those are perpetual preferred shares, so the debt never comes due. Okay, that's a big deal. That's a huge deal. He does still have the converts, right? The convertible debt, right? The 2028, 2029, 30, 31, 32, right? So he still has that convertible debt, but he could just move that debt forward. He doesn't have to cash it out. And there's also, a stipulation in there that if Strategy shares hit a certain threshold, then that convertible bond or that convertible debt would turn into MSTR shares, right? So again, very well positioned to weather a storm, right? And this is, also coming from Lynn Alden. If you guys follow her, she broke it down very well. That strategy, it would have to go through some really apocalyptic scenario for them to get, quote unquote, liquidated, right? Saylor has said that, they'd have to be in a bear market for 5 years or so before any problems. And he went over the earnings report and said that they have $2.3 billion in cash sitting on the sidelines for an $888 million dividend that they have to pay every year, for all of their preferreds, all their perpetuals. Like this is what he means when he says that they have a fortress balance sheet right now. So whether you love them, hate them, don't like Bitcoin, hate strategy, like strategy, hate Saylor, like Saylor, whatever. This is just the data. This is just the facts. Okay. So anyways, let's continue on.
Really indestructible. Bitcoin can fall to any level. It won't make much difference to us. We will equitize the debt we have over the next 3 to 6 years. We will buy Bitcoin, if not every week, we'll definitely be buying Bitcoin every quarter going forward.
Makes no difference if...
You heard him say equitize the debt. That's the convertibles. All right. That's the converts. You guys might know that ETF from Rexshares called BMAX. So the convertible debt you could not invest into directly as a retail investor. Only institutions could buy the convertibles, right? And basically those convertibles come due and then they get equitized or they get turned into MSTR shares. So what Rexshares did to give retail access to this, because they are technically Wall Street, they're technically an institution, right? What they did, which was really genius, they created BMAX. All right, so Rexshares BMAX ETF, and it basically holds all of those convertibles along with a couple other treasury companies. And this allowed access for retail investors to get, a proxy into that convertible debt if you believed in that convertible debt. So fascinating financial engineering all around. Just absolutely fascinating how he was able to do this with strategy. And the ultimate goal, there's no fancy gimmicks here. The ultimate goal is just to acquire more Bitcoin. That's it, right? It's as simple as that.
Bitcoin goes all the way down, and yet your whole strategy at Strategy is very much based on Bitcoin. I mean, you mentioned your premium. Historically, your stock had traded at a much higher premium than what Bitcoin was at. That is no longer the case. So do you have a framework, Michael, for reclaiming that, I guess, that premium absent any rally in the next, I don't know how long a crypto winter lasts. You said that it would be shorter, but absent any rally in Bitcoin back to 126,000.
Well, our equity is trading at a premium to our net asset value right now. So we've already reclaimed that premium. We've got enough capital for the next 50 to 60 years. So unlike investors that need the market to do what they want in the next month,
capital, I see 2 billion. I see 2 billion
we have
of cash.
60 years. We have 60 years of capital is we can wait out any short-term downturn in the market. A week, a month, a year doesn't matter to us. We're like the company that owns 3.4% of Manhattan with enough capital to hold out to the end of this century. And you're telling me that it's been a bad week or a bad month in Manhattan real estate market. We believe in the future of the network, and we built a balance sheet accordingly.
That's an interesting.
Man, come on, guys. Come on, man. Come on. And nobody wants to mess around with MSTR, man. Everyone always has a freaking opinion about MSTR going to zero, Bitcoin going to zero, blah, blah, blah. I mean, come on, guys. Come on.
Analogy. I like it. I think it certainly works for people who might not be understanding what's going on. But when you say capital for the next 60 years, in what form?
We have $2.25 billion worth of just cash. And we have Bitcoin, about 717,000 Bitcoin, which is equal to about 55 years worth of dividends.
Okay. All right. That is if they hold up. Given the dividend obligations on preferreds, interest on convertible debt, there's all of that. And you're.
You guys notice that they always try to hit them with these hypotheticals, right? Like these if it holds up. Well, what if the sky falls? What if the freaking, the United States gets hit with an EMP bomb and all the wallets are fried? What if, right? What if? And like, let's just be honest here. If you believe Bitcoin's going to zero, you don't touch strategy, right? If you don't touch Bitcoin at all, right? But if you believe Bitcoin will at least stay above $1 and it has a chance of going even higher, it is, you believe in the thesis that it is, sound money, digital gold, then this is a no-brainer in my opinion. Right. This is why I still hold my MSTW shares and I will not sell out of those. Right. Unless something catastrophic happens. And even then it's already too late because I've already taken a massive paper loss anyways, but I still won't sell. I made a video a long time ago talking about, because at the time I held Misty and common stock MSTR, right? And then what I liked about Roundhill was they basically combined those two into one product. So I didn't have to really, think too hard about that. It just made sense for me. I liked the idea that MSTR or MSTW can actually, trade relatively close to MSTR shares, right? Especially if we have this really parabolic move on MSTR. Is it going to happen next week? Is it going to happen in a month? Is it going to happen this year? Nobody really knows, right? Everyone's calling for a bear market. Everyone's calling for a Bitcoin winner. Everyone's calling for something, right? Something bad is going to happen or something good might happen. Maybe we hit 250K by the end of the year. I don't know. But I do know that I have a strong conviction in MSTR, right? I have a strong conviction in MSTR. The fundamentals make sense to me. It is scary to buy, especially at, a 70% haircut or even larger than that. It's definitely scary. But again, that's where your conviction and the fundamentals of your own research come into play, right? Listening to some Joe Schmo on X, post, just random garbage is not part of my conviction. So anyways, let's listen in and we'll probably move on.
For operating costs, what is the pathway through which you would generate actual cash flow independent of Bitcoin?
Yeah. The thing to keep in mind is that Bitcoin is outperforming the S&P by a factor of 2 to 3. And so if you can hold out through a 4-year cycle, then you can expect to outperform the S&P index. We have the option to simply hold the Bitcoin and return the Bitcoin or capital from the Bitcoin to our investors, or we can sell the equity that's backed by the Bitcoin in order to pay the dividend. Or we can sell derivatives based upon our Bitcoin holdings in order to pay.
Derivatives, you guys heard that, right? So he mentioned this a couple of times in previous interviews, and he said that they could just do derivative strategies, things like cover calls, options, etc., on the Bitcoin that they hold. So again, they still have other strategies. And we talked about it before, but BlackRock is coming out with their own, their own Bitcoin, cover call income strategy for Bitcoin. So if they're doing it, what does that tell you guys? Like if they're doing it, if they're, taking it this seriously to launch an ETF, what does that tell you, right? What kind of signal does that give the markets? So let's
pay our dividends.
Let's talk about STRC. So that to me is an interesting one because this is your digital concept for credit. Explain to people what that is, because it is paying off, 11% dividend to shareholders? That is a very rich dividend. How are you able to do that?
Imagine you take a company public that holds a bunch of Manhattan real estate that you expect to go up 7% a year. Then you sell a preferred stock that pays a 3.5% dividend each year. You're just returning the first half of the capital appreciation of the real estate back to the credit investors in the form of a dividend. If you were holding the same amount in gold and you thought gold would go up 10% a year, you could pay a 5% dividend in a preferred stock. We are holding Bitcoin, which we expect to go up more than 20% a year. So we offer 11% dividend yield on the preferred stock backed by the Bitcoin that we hold. And so the credit investors are getting the first 11% return on Bitcoin in the form of a credit instrument. The equity investors are getting the return in excess of the 11%. So what we've done with STRC is created a digital credit instrument that can pay double-digit dividends, like 11%, in a return of capital dividend, so it's tax deferred. And then we over-collateralize that credit instrument with $4 to $5 worth of Bitcoin whenever we sell $1 of stretch.
Michael, isn't that based, though, on a blue sky scenario? You began the sentence by saying, imagine if you were in real estate and you expect real estate to go up 10%. Well, in 2005, 6, 7, everybody thought real estate was going to continue to go up, and it did not. It imploded. There are moments in time where these black swan events happen, and I think that it's important for people to understand, what is the backup plan?
Well, that's why we have 2.5 years worth of cash on the balance sheet. So if the market seized up for the next 2.5 years, we just pay cash. That's why we have the...
All right, guys, I think we had our MSTR fill here. All right. I appreciate you guys hanging in there. I'm going to come back and listen to the rest of this. But yeah, this is Saylor explaining everything about MSTR, just absolutely destroying the bear cases out there against strategy and definitely against, this liquidation event that's going to happen just because, Bitcoin is below their cost basis, which again, to me is absolutely silly. But anyways, we had some bigger news, right? So Charles Schwab, and I know someone just mentioned this, right? Someone just mentioned this in the chat. But I want to also just cover this real quick. But Charles Schwab bought more strategy shares in Q4 2025. Again, it's just more smart money, more big money buying strategy, buying MSTR. Okay. So when everyone's freaking out and everyone's saying it's going to zero and this is a trash company Ponzi scheme, I mean, why would Charles Schwab, a very notable, bank out there, very, very reputable, broker out there, be buying this? Okay. So that's one signal in my mind. All right. We have also, like I mentioned earlier, BlackRock is, this is moving on to our Ethereum piece. Let me go back to this. So there's a lot of 13F filings coming out. All right. So Charles Schwab was in one of them. I have not found the actual 13F filing, but I wanted to cover this because, again, it's just adding more signal to why strategy, shouldn't be scared. It's part of the whole fundamental reasons of why you should invest, or let me take that back, why I invest in something like an MSTW. Okay. And why I can't be shaken out, even if MSTW goes down even further, right? Because everyone's scared of that. It's probably going to get a reverse split, right? Let's just be honest. That's probably what's going to happen. MSTR going to zero, I can't see that happening. Do I see it if we're to take it from its all-time high of back, like 425-ish, right? $425 a share. If you were to take away 90% of that, right, it's going to end out around the $50 to $75 range. I think it'll probably go a little bit lower, to the, $75, $80 range. And that's not based on any technical analysis or anything. That's just my own thoughts, kind of what I've just been seeing out there on X and people I follow on YouTube. So is that out of the question? No, I still think we have more downside for Bitcoin. So it would only make sense that MSTR is going to go down with that. But again, you still have these big banks, these big institutions also picking up strategy shares. All right. And again, remember, back in December, there was this whole, Fugazi thing about, MSCI delisting strategy because it's a Bitcoin treasury company, right? And that turned out, basically what MSCI said was that instead of delisting you, what we're going to do instead is when you issue out new shares, we're just not going to add that to the index. Okay. So you have all of these other, banks, whatever, all these other funds out there adding shares by themselves, not because they have to, passively because of the MSCI indexes. Okay. So I think, again, that is a very good sign for me personally for strategy. Again, yes, it's down. It's down by a lot. It sucks being down. It sucks being in the red. I get it. But I'm not getting shaken out because eventually, in my opinion, it's going to have a really sharp move up whenever Bitcoin rebounds. And so I always said, if you're bullish on Bitcoin, you're bullish on MSTR. I mean, that's really it, right? Okay, moving on. We had some news about Ethereum come out, right? So again, I apologize. I know this is a very crypto-heavy stream. It's usually not that way, but I just found so much interesting news about crypto. And again, I follow, BMNR, MSTR, right? So I want to cover these pieces. All right. So again, this is just more signal. All right. BlackRock is actually coming out with a staked ETF for Ethereum. This is a big deal. This is the news that I found. BlackRock, Coinbase to keep 18% of Ethereum staking revenue in the new ETF that they're launching together. All right. And basically what that's going to help with is just the management fees, right? FB, right, as opposed to FA, which is their Ethereum spot price ETF from BlackRock, is well placed to become the largest Ethereum ETF. Unlike its predecessors, it would generate staking yield, which on Tuesday was estimated at 2.8% annualized, right? So you have companies like BMNR, right? This would almost be a competitor in a sense, right? Although BMNR would be technically a leveraged proxy for Ethereum. This is going to be an ETF that offers Ethereum plus staking rewards, right? This is a big deal, right? Really big deal. FB will share 82% of its staking rewards with investors. The other 18% will be split between BlackRock and Coinbase, the ETF's prime execution agent. And this arrangement creates a financial incentive for the sponsor to maximize the amount of Ether staked by the trust, right? So your interests as an investor and as a fund sponsor or fund manager, your interests are pretty much aligned because you want staking. You want staking for Ethereum if that's what you're interested in, right? BMNR, they don't stake all of their Ethereum. I think they're only staking, a third of it. But if you're one of those investors that wants maximum stakeness, I guess, out of Ethereum, this ETF could be that route to take, right? For you to earn passive rewards. So FB will only stake between 70% and 95% of its ETH under management in order to ensure it can honor investor redemption requests. I.e., if you want to hit that sell button, you'll be able to get your money out. So this is a big deal. Again, this is bullish for Ethereum. And again, look at Ethereum. Everyone's selling out of Ethereum. Everyone's getting out of BMNR. All the FUD is out there. The same thing for Bitcoin. Meanwhile, you have the big players in the background silently just doing what they do, right? Just doing what they do, continuing to buy, continuing to create products, and continuing to I think get you to sell out of your crypto, right? Get you to sell out of your Bitcoin so that they could pick it up, right? Or in this case, Ethereum. But this is a very bullish sign, in my opinion, for Ethereum. So we covered this last stream. All right, we covered this last week. We only covered one. I think it was Citigroup and BlackRock. But look at all of these other companies, all these other banks picking up BMNR shares. Okay. These are all from 13F filings recently. So you have Morgan Stanley increasing by 25%, Charles Schwab 59%, ARK, Cathie Woods 26%, BNY Mellon 497%, and Stifel up 39%. Okay. This is, just some additional 13F filings for BMNR. Okay. Bank of America, of all the banks, Bank of America initiated position, right? So they picked up an increase of 1,600%. Okay, 1,600% of BMNR. But of course, look on X, look on YouTube, everything comments, oh, BMNR is a Ponzi, Tom Lee's a scam artist, blah, 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 blah. Meanwhile, what are the banks doing, right? What are these large institutions doing? We also had Canada. All right, Royal Bank of Canada picking up a bunch of BMNR as well. Okay, again, stupid money gets scared out and the cycle continues, right? The cycle repeats itself. So I just thought that was rather interesting, guys. All right. So again, I hold BM&R. I hold a pretty sizable position of BM&R shares. I will not sell out of BM&R. I don't care if the thing goes to zero. I am not selling out of BM&R. One, again, same reasons as MSTW. I'm already down a lot, right? So it doesn't make sense to take that haircut anyways. But two, I have a huge conviction in BM&R, and I have a huge conviction in not just BM&R, but the management. All right. Tom Lee, in my opinion, very reputable person. Okay. You could not put a more trustworthy person in the seat for BM&R, right? And Tom Lee's bullish on Bitcoin and Ethereum. And I like the thesis for Ethereum as well. All right. I like the thesis that, more and more of these large financial, I keep saying the word institution, but these large financial whatever are coming onto the blockchain, and they're coming onto Ethereum, right? BM&R is not just going to be holding Ethereum and staking it. That was, that's part of it. They also have their moonshots. They're allocating 5% of their total their total cash pile. They're allocating 5% to moonshots, right? So they have 200 million in Beast Industries, and I forget how much, 20 million in Orb or WorldCoin. So that is pretty cool. They have their Maven as well that they're working on, and they're assisting Wall Street with the migration onto Ethereum, right? They're very involved in the Ethereum Foundation, and basically spreading the good word about Ethereum and the blockchain. So again, I like what BM&R is doing. I was kind of thrown off with the whole Mr. Beast thing, but I let that digest a bit, and I understand now why they're doing this, the whole moonshots thing. Which again, if those theses play out right for Mr. Beast Industries or WorldCoin or whatever they're calling it, that's only going to be accretive to investors. The share price will reflect eventually in the future. So, or maybe they sell their stake and just buy more Ethereum, right? I mean, there's so much they can do. They hold, I think, a couple hundred worth of Bitcoin as well on their balance sheet. Okay, so we're moving on to the ETF drops. All right, I'm not going to go too in depth with these ones, only because one, I get the auto callable thing, right? But I don't want to go through a whole prospectus for it. Okay, there's plenty of YouTube videos that will definitely deep dive this stuff. I'm definitely not one of them because it's just brand new ETFs every day. But I will offer some of my own thoughts on it. All right. So we have Roundhill Tpay. Again, it's a 10% distribution, managed distribution that they're coming out with. They have Xpay right now, which is a 20% distribution. And the only reason why I would think that they would be launching this version, this 10% versus the 20%, is for NAV stability. That's really it. Because if the S&P 500 does not return above, a 20% gain, right, that's when you start running into the whole NAV erosion piece, right? If the stock market starts to go down, where are they pulling that money from, right? They're pulling it obviously from the NAV, and it's just going to keep going down, right? And they already forecasted a 20% for the year. So the 10% is a little more less risky, in my opinion, right? They're only going to do 10%. And again, in that same scenario, if you were to have, the S&P 500 continuing to climb higher, well, you're just going to get that managed 10%. You'll probably have price appreciation, NAV appreciation, all that good stuff. But in a market that's going down, that is where you're going to separate the wheat from the chaff, right? That's where Tpay will probably also have problems, probably less so than something like an Xpay. But this will be, ROC, that type of deal. Same thing as Xpay. It'll be ROC, return of capital. So, you would have, if you were to dump, let's say, a hypothetical 100K into this ETF, it would take you 10 years to get your money back. And then after that, it's quote unquote house money, right? But I could see this being, a pretty decent product for a certain type of investor, someone that wants a little something with less, risk, in regards to the NAV. It's not going to cannibalize a NAV like Xpay could. Or any of these other ETFs, really. A lot of these ETFs, cannibalize the NAV like crazy. But this one is going to be less so. It's a 10% yield, managed distribution, and it's the same mechanics as Xpay, right? So you're going to get that steady 10% a year, right? So if you were thinking about, in my opinion, right, this is just me talking out loud. I'm not saying go do this. This is not financial advice. But if you were looking for a product to start a baseline in a portfolio that's index based at a solid 10%, right? This could be a good candidate for that sleeve, right? For that income sleeve. You have other competitors out there. You have GX, from Goldman Sachs. You have SP or SPY from Neos. You have even, like something like XDTE from Roundhill. You also have SDTY from YieldMax. But, SDTY, XDTE, those are 0-day or 0 DTE cover call strategies, whereas GX and SPY are cover call strategies. This one does use, the same kind of cover calls long dated that XPay would use, but again, they're just targeting a 10% in annualized distributions. So that's kind of my thoughts on how I would approach something like this. Again, could make sense, maybe not, again, depends on you as the investor. All right. We also have the Rexshares coming out with their auto-callable income ETF. That's going to be launched tomorrow, ticker ATCL. I'm not going to go into this in depth. I'm not, going to pull up the prospectus. There's enough videos on auto-callable ETFs on YouTube. You can look at Marcos, you can look at Spencer, you can look at Income Architect. There's plenty of them. I think the Working Investor, I'm not sure if he's in the chat or not, but I think he's also covered it before, the Calamos ones. But yeah, basically the big, I guess the big advantage is, I guess the risk would be that unless there's a huge dramatic drop in a single month, the ETF can't go to zero. So there's, some protection there. I think it was like 80%. Skeptic, if you're in the chat, can you help me out here? Because I honestly can't remember much about the auto-callable income ETF. But I know that the auto-callable stuff has been making waves in at least the high yield space. It's slowly starting to come up. So just wanted to cover this. All right. So real quick, ATCL seeks to enhanced income tied to equity performance, not traditional credit or duration exposure, systematic construction designed to help mitigate timing and reinvestment risk across market conditions, packaged into an ETF delivering efficiency and liquidity. All right. One thing that just came to mind reading this out loud. Right now we're in this really volatile time, right? You guys can see from here, just constant, rotation of money. Okay. Last year, it was all AI tech, right? It was semiconductors, all that stuff. Then towards the end of the year, it became metals, right? It became gold and silver, right? And then over the month, everything just sold off. And then everything now is in energy, right? Energy, consumer staples, materials, utilities, and real estate is getting a bounce, right? Real estate has been in a very bad bear market these last couple of years, since 2022, since the start of 2022. Real estate has just been in a very bad bear market. But you see the money starting to rotate, right? Instead of you having to pick and choose what to do, right? You could just probably have something like this product where they will just do it for you, right? So you're going to have a professional fund manager, take care of that rotation for you. You don't have to worry about it yourself, So if you're that type of investor looking for a product, then this could potentially be something. But another competitor to this is the Calamos IE ETF. Let me pull that up for you guys real quick. CAIE ETF. Yeah, this one, bros. All right, come on. There we go. Okay. Yeah. So this is the other auto-callable. There's some interviews with the fund manager. He explains how all this stuff works. Honestly, I'm going to be honest and upfront with you guys. I never watched those videos because I'm just not interested. I'll skim it, or skim some of the comments I've seen about these ETFs. But honestly, I just, there's a brand new ETF coming out every single day with some new strategy, some new update, some new prospectus, ETF wrapper with 100 new things in it. Like, I just can't keep up with all of it. Right. So I'm sure if you guys, search up this ticker right here, CAIE on YouTube or something, I'm sure a video will come up and they will explain it fairly well, right? Fairly well. All right. So that is that for that. I'm not going to go over these videos with you guys because we're already running over about an hour. Let's see, maybe we can just listen to one. If we had to listen to one, I want to listen to this one. All right, so we're going to listen to this one. Let me just check the chat real quick. Whoa, Farouk, man, my man. Thank you. I appreciate that. Thanks for your alpha, sir. Hope to meet one day. Absolutely, man. I appreciate that. All right, $20 super chat. I really do appreciate that. That means a lot to me. All right, your support obviously is very, very appreciative. You did not have to do that at all. All right, so I'll probably use that money and throw it into the brokerage account. Not sure what I'll do. Maybe I'll pick up something. I don't know. Maybe I'll buy some more MSTW with that. Or something. I have no idea. Maybe I should just start buying an index fund at this point. Or maybe I should use that money for Bitcoin. But hey, I really do appreciate that. I really do. It does mean a lot, your support and for this channel. So we have skeptics saying, I can answer all your auto-callable questions. CAIE is fire. And I don't doubt it one bit. I do not doubt it. You've mentioned it 100 times. I still don't have any money in it, right? Again, there's too many damn ETFs that come out for, not even just high yield, but that just come out for in general. And it's hard to really keep up with all of it. And not only that, you start getting the shiny object syndrome, right? It's like, oh, I could have just a small sliver. The next thing you know, you have like 50, 70 ETFs in your portfolio. And it's like you're hedging against yourself at that point, right? But anyways, I want to listen to this one. This is Feds Goolsby on Squawk Box, and they're talking about interest rates, right? So I think this is going to be very important to this year's story. And I do have a poll out there, so we'll check that poll as soon as this video is done. Let's listen in.
Chicago Fed President Austin Goolsby. Austin, thank you for joining us this morning.
Great to see you again, Steve.
Okay, so let's talk about this inflation report that came out. 2.4% on the headline, 2.5 on core. Austin, what is not to like?
Well, there's some stuff to like, but there are a few things a little bit warning. Remember, when the inflation number comes out, that's a backward 12-month moving average. So 1 month fell out from 12 months ago, and that was a really bad inflation report. So this thing went down, but that doesn't mean that the new information was great. We've seen progress on the shelter side, but there's a little statistical pollution still going through that. And the part not to like is that services inflation is not tamed. And core inflation, which is what we think is a steadier measure, that came in at around a 3.6% annual rate. So we saw some progress, but we saw some warning. I want to get some more information.
Yeah, so Austin, I hate to take things out, but the top line, we look at commodities, less food and energy. We want to know how tariffs are affecting inflation. That came in at a big goose egg. But if you take out that big decline in used cars, you do see some upward pressure from the tariffs. How do you look at this? What's your assessment of how tariffs are affecting it and whether or not it's something the Fed ought to be looking through?
Well, that's different questions. I think you never want to use 1 month and hang it all on that. As I always say, 1 month is no months. If you take a 6, 7, 8 month trend here, goods prices, which had been, inflation had been low, they jumped up. If you just break out commodities by the percent tariffable content in them, you see a pretty clear relationship on goods prices that those goods where there were more tariffs have tended to have higher inflation. My hope is that that's a one-time thing and that proves to be transitory. And certainly that's been the argument, that maybe the Fed can look through that. Yes, if it doesn't spread to services and if it goes away. So my thing has been, I do think that if this proves to be transitory and we can show that we're on path back to 2% inflation, I still think there's several more rate cuts that can happen in 2026. But we've got to see it. So far, I think we've been basically stalled out around 3% with some positive signs, but also some warning signs. And we're supposed to see this progress.
Austin, several is an interesting number. You could be 2. It can't be 1. It could be 2, 3, 4. How much do you think? Do you have neutral in your head at 3%? Do you have in your head that the Fed can and should be at neutral? Or do you think it could be below neutral?
I loosely think that around 3% with 2% inflation and a 1% real rate is a loose target, and that's approximately what comes out of from the dot plots, where every month, every quarter, they ask the committee where do they see rates in the long run. But you raise an important point there, which is if inflation is running steady at around 3%, PCE inflation around 3%, I don't even know how restrictive we are in that environment with rates where we are now. The R star, the kind of definition of neutral, is a real concept, is a take the interest rate minus inflation. So if inflation runs persistently high, we're loosening. We're being looser than we otherwise would. So that's why I say,
got it.
I want some evidence that we're headed back to 2%, and then I think rates can keep coming down.
Hey, Austin, Kevin Warsh, we've had some people that worry about a lot of things say that there are members of the Fed that just don't like him, and that he's going to have a lot of trouble getting consensus. So whatever he says he wants to do, it's not guaranteed that he's going to be able to get the consensus that he needs to do what he wants to do. Can you comment on that at this point? How you feel? That you can rat some other people out that don't like him?
I've known him I knew him for a very long time. In 2009, 2010, back in the financial crisis, when I was working at the Council of Economic Advisors and he was at the Fed, the CEA and the Fed meet regularly. And I'm a big fan of his and have known him for a long time. So I don't know the intricacies of the negotiations that you're talking about. I think he's a reputable guy, and I look forward to.
Some of your colleagues, when they found out, were they going, and rolling their eyes?
I haven't seen that, but
it seems like Fed chairmen
we're not supposed
get
to be
their
talking
way,
about
don't they?
what other people think anyway.
We used to just assume the Fed chair gets
Austin,
his way.
We got to go. Can you do what Kevin wants to do, which is to slash the balance sheet and cut rates? Can you take $1 trillion off the top of the balance sheet and cut rates by 1 percentage point? Do those two things work together like that?
Leave the sides, more off the top.
It sounds complicated, but we'll have to just look through them as they come through.
You're only the second best looking guy now on the Fed. Awesome.
You're.
Okay, that was a little weird. We're just gonna go ahead and move on, guys. All right. Let's see real quick. So just some highlights from this interview. All right, inflation showed some improvement, but part of the drop is due to a bad month rolling off the 12-month average, not necessarily strong new progress. All right, services inflation remains sticky, and core inflation is still running around the 3.6% when annualized, above the Fed's 2% target. Goods prices have risen recently, and items with higher tariff exposure show clear inflation pressure. Okay. So Goolsbee was saying that he hopes the tariff effects are transitory. Of course, we heard that word several times over the last couple of years. And transitory, just, that at this point, it's a very bad word. But anyways, but he wants to see proof that they don't spill into services. Okay. If inflation clearly moves back towards 2%, he believes that several rate cuts could happen in 2026. This is in alignment with Goldman Sachs, that is forecasting about three to four rate cuts this year. Okay. And this is after, of course, Mr. Powell gets removed or moves on from his current position. All right. Neutral policy rate is roughly 3% nominal. The Fed needs more data before easing further. Inflation appears stalled around 3% for now. If you're a believer in truflation, you'll see that truflation has, CPI, United States CPI at around, 75 basis points, right? So that's almost 2.25 below what, we're seeing right now. Because again, when you look at the CPI data, it's produced by the Bureau of, Labor Statistics, BLS, and that is backwards looking. Okay. So that's backwards looking. That's data that is cumulative, from the last month or the last reading. Whereas, truflation is using live data, right? And they're pulling the data from, millions and millions of sources. So we put a question in the poll, and the question was, how many Fed rate cuts do you think we're going to get this year? Okay. 19% of you said we're going to get one rate cut. 66% of you say we're going to get two. And then 15% of you said we're going to get three. And I'm going to go ahead and go with at least the two. All right. I would like to be pleasantly surprised if we get three or four. But I would, also, at least for a base case, at least for what I think for right now, at least two would definitely be nice. Okay. That would at least, I won't be surprised, right? If we don't get more than that. So I'm going to go with the 66%. I do appreciate everyone who did take the time to put it in their vote. All right. So real quick, just want to check. Let's see. Okay. So Farouk just said, I just passed $2,000 with my self-managed account, all NEOS ETFs to keep it simple, reinvesting in it every 30 days. All right. And that's awesome. Again, NEOS has been getting a lot of love lately. And they came out with some great products. As a matter of fact, let me just pull it up if I can find it real fast. I think Mr. Skeptic, who's always on top of this stuff, had posted it. And of course he did post it because why else wouldn't he? All right. But talking real fast about Neos, right? So this is the Neos lineup. I think this is a really nice chart. It kind of just illustrates everything that you want to see that's coming from Neos, right? So they have their equity high income, their high income alternatives, right? So Bitcoin, Ethereum, real estate, gold, and MLPI. MLPI has been gaining a lot of traction because, again, when we're talking about the debasement trade, we're talking about investing in real assets, right? If you're to invest in a MLP, which is a mastered limited partnership, you're going to be, paying additional, not really, but you're going to be, well, let me rephrase this. When you invest in an MLP, they usually produce what's known as a K1, right? So that's just extra tax documentation that you got to submit to your CPA or your tax people, right? Depending on who you go with, they could charge you per K1, right? So not ideal, especially if you have 50 of these K1s, not entirely ideal, right? But with MLPI, you're not getting those K1s. Instead, they're doing, of course, that income-based strategy, the options, overlay, and they're just collecting that premium and then dishing it out to you guys, right? To you investors. So MLPI, again, has been getting a lot of love. And if you're a believer of the debasement trade, the devaluing of the dollar and real assets will raise, something like a gold, something like a Bitcoin, and something like MLP or real estate, then, these funds from Neos could probably fit that bill, that appetite, if you want something like that. BTCI has obviously been getting beaten. There's like a beef going on between blocks and BTCI holders. It's comical. It's absolutely comical. Like a lot of blocks people are getting out of blocks. They're saying blocks is trash. BTCI people are saying you should have went with BTCI to begin with. Blocks is, obviously the underlier. Bitcoin, Ethereum are down along with all the mining companies. So yeah, it makes sense why blocks is down, right? Nicholas, the actual fund manager, he's out there basically saying, they've been managing the downside protection very well. And, it was well received from the comments I did see. So Nicholas has been managing that blocks ETF on the way down, right? It may not be the best, right? It may not, he said it perfectly. In a down market, it's not about, it's like in a down market, how did he put it? I'll try to find the tweet, but basically he was saying like, it's about losing less, right? That's really it. In a down market, it's all about losing less. That's how Wall Street looks at this stuff. And then of course you want to capture the upside later on. So I thought that was just an interesting, kind of perspective that it's all about losing less in a down market. You don't sell, at losses. You implement some type of strategy, I guess, to not lose more if you were to actually hold through or something to that effect. Nihi has also been kind of making some waves because we had the working investor on, and he was making a case for international stocks and ETFs, more so ETFs, not stocks, but he was making a case for international. Nihi has been getting a lot of love as well because it has that international exposure. Of course, this is an option income ETF, so you're going to get that that options based income for your portfolio. Everything else is kind of whatever, like over here. I never really looked at the credit select income. I believe this is bonds or bond income. Yeah, Bondi, Pam Bondi not doing so hot these days, Dow at 50,000, Dow at 50,000. Okay. All right. Let me get off this. But yeah, anyways, BTCI loved by a lot of people. IYRI, if you want to get that real estate exposure, a proxy for real estate, but you want to make that income, or get some type of option-based income, you can consider that. These other ones down here, these are the ones I've kind of been really keeping an eye on. I really kind of like the idea of XBCI. Although it's really spicy, guys, it's 150% leverage exposure. So you got to be careful with this one. Roundhill, they were supposed to come out with 120% for Bitcoin, right? For the price movement of Bitcoin. That has yet to be come out or yet to materialize. I have not seen any movement on that. I think Neos was smart and moving fast and probably grabbing up that market share. But I'm just a little scared of having a 150% leveraged ETF, right? Me personally. Maybe I try to time the bottom for Bitcoin and then just ride it all the way up. I mean, that is a possibility. That would be really, really sick, actually. But of course, we don't know. And I already have enough Bitcoin exposure to, MSTW or to IBIT. So adding something like XBCI may not make sense for my portfolio unless I want to swing trade it. But even then, it's like, to what end, right? If you want to collect the income, I guess that makes sense. But again, if you have something like an MSTW already, then what's the point? But, if you want something more of a pure play, on Bitcoin, then this could probably, fit that idea. Let's see. So yeah, I mean, these, and of course you got the hedged equities, but yeah, I just wanted to cover the NEOS thing, the NEOS topic, because again, they've been getting a lot of love recently, them and Curve, because, they have the safer NAVs, the safer ETFs, right? They've always been great. It's just people did not like their payouts, right? But after going through Yield Max and Roundhill and some of these other guys, Granite Shares, and just seeing their principal completely turn to dust, people are now getting into the NEOS. And eventually at some point, I think, especially for these ones, at some point, there's and I like the idea of XSPY. Don't get me wrong. I really like the idea of XSPY and XQQQI. I really do. It's on an index. But of course, if the indexes, the S&P 500, the QQQ, if they drop 15 to 20%, I mean, with 150% leverage on top of that, I mean, you're looking at like a 30% loss on some of these ETFs. So you got to be careful, right? Would you swing trade these or would you buy and hold these? I don't know, right? Again, for me personally, the 150% is kind of spicy. I would rather not have 150% leverage in my portfolio. And if I do, it'll probably be a very small allocation. But yeah, I wanted to cover this again. NEOS has been getting a lot of love, a lot of in the high yield income space. You have a lot of YouTubers who are involved with NEOS, and they're doing great videos for NEOS, and they're talking about it. They're having their spot in the light, right? Before that, it was Roundhill, right? Everyone loved Roundhill until we hit, this market and started chopping sideways and then down. And then before that, it was like Yield Max and Rexshares, right? Again, there's always going to be a rotation of ETFs. Oh man, we got some shots fired from Wolf. For the people who hate blocks, it is beating BTCI and YBTC in total return from blocks' start date. Oof, man, shots fired over here. Wolf, man, you got to be careful. Make sure you're wearing your vest when you walk outside. Check underneath your car. We have Odyssey 4. I haven't seen you in a bit, man. Hope all is well. Use the dividends from QQQI and SPY to get the boosted ones. Now, that is an idea. Right here. So you would ideally, again, use the distributions and then purchase these ones. I've seen that done. Perry PI, Perry, I think that's his channel, Perry FPI. He's covered this. He has a really good model, in my opinion. I'm not saying I follow his model. I'm just saying it is a good framework, a good model. But, he calls these, the juicer sleeve or something like that, where you'll invest into these really high yielding products. And you could take that distribution and, of course, reallocate it to something else, right? That's basically what he's been doing with his portfolio. He just published a video. Recommend people check him out as well. He's a Canadian investor. So, he has all of those types of ETFs. But, I mean, man, like high yield, in the high yield space, there's always some new, not strategy, but some new idea on basically how to structure a portfolio. And it's for, whether for good or bad, it's the fact that people are experimenting, because all of last year, it was nothing but, like everybody was winning, right? And now this bear market, which was much deserved, bear market, whatever you want to call it, this volatile time was absolutely needed to really shake out some of these strategies, to prove these strategies, whether they work or not. Because again, in a bull market, everyone looks like a genius. But when we hit these really violent, choppy markets, right, some of these ETFs get absolutely wrecked. And that's just the way it is, right? That's just the way it is. But yeah, that is a good method to use the dividends from QQQI or your index-based option income ETFs and kind of look for other things. But I've seen it the opposite way, where people use more of the higher yielding stuff, like the Granite Shares or the Yield Max stuff, and they'll reinvest either into the actual underlier, or they'll invest into, safer assets like a SPY or QQI. I guess there's really no wrong answer. I mean, everyone's going to have an opinion which way is the best way, or or all of these ways are stupid, just buy the underlier, right? Everyone's going to always have an opinion. I think the best thing to do for most people is just to calm down and think through the strategy, right? Don't think just 1 year, think a full year, think worst case scenario, and can you handle red in your portfolio? That is a big question, right? Because everyone's always talking about getting to house money, right? Everyone wants to get to house money. Like this is the casino, right? I guess it is. But everyone wants to get to house money. So then, they got their whole ROC back or their whole, principal back. And now anything after that is whatever, right? It's free money, as Citizen of the Year would call it. But putting that capital to work in better assets could be beneficial for your portfolios, a portfolio over the long term, right? Of course, not financial advice. Let's see what else we got. So I appreciate that comment, Otis. Let's see. So we have from Skeptic, T6, TDAX is doing well. Actually, those were those swap agreement funds, the 120 leverage from Tap Alpha that came out. I have not looked at those since they launched, so I'll have to go back and take a look at them. Let's see. Farouk says, I want them all because I'm building out a max income producing portfolio. I buy, never sell, and always reinvesting. See, that is the key, I think, for a lot of these portfolios. Like, you're going to have red, and I hate to say it this way, but you got to ignore that stuff, especially if you're investing in high yield. Like, if you fully understand what you're investing into, right? Cover call ETF, a vanilla cover call ETF, an ETF with all these fancy strategies in there, blah, 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 right? If you put your money in there, make sure you have conviction. One, you have conviction in the strategy. You understand what's going to happen. You have a plan, right? Build out a 1 year, 2 year, 3 year plan for that ETF, right? It has to serve a purpose, and then just let it go, right? Again, I like to tell this story. I had a friend who recently, got into high yield, and he was asking me for some, opinions, some thoughts. And I said, if you buy into these funds, don't watch YouTube anymore. Stay off X. Don't go to Instagram. Don't search for any of this stuff. If you do your own research and you understand what it is and what it will do, and that you'll be read most of the time, or all of the time, do not go on YouTube. Do not go on Reddit. Do not go anywhere else, because you will get scared out and you'll just end up amplifying your losses. So that is just my thoughts when it comes to this stuff. We got Sergio in the chat. What's up, man? Hey, welcome back. Let's see, what do we got here? So we got from Comic Book. Always asking the good questions, man. Comic, I really do appreciate your questions. When you construct your own investing thesis, do you define specific sell points or exit parameters in case a holding no longer justifies its position in your portfolio? No sell points, no exit criteria. It's when the thesis changes. So I'll use BM&R as a quick example. Or let's not BM&R. That's not a good one. Let's say Palantir. Right? Because I'm in PLTW. When I invested into PLTW, right, I had a whole thesis for Palantir, and that the idea was that, and this gets a little conspiratorial, right, but it's true, right? This is all based in fact. And again, this is about to get a little political. I'm not here to discuss politics. Red, blue, green, independent, Trump, MAGA, woke. I don't care. Democrat. I don't care. All right. I'm just showcasing what I found out. There's a little handbook out there called Project 2025, right? You guys can check this out yourself. But in there was a whole section on the government basically renovating the alphabet agencies, renovating the DoD, and implementing artificial intelligence. My thesis was that Palantir was going to be the premium model, well, not premium model, right? But it was going to be the premium company for the job. They were going to be picked for all of this. And it played out pretty much the way I thought, right? So Palantir was used extensively for a lot of operations that we don't really know truly about. You have them being implemented by the CIA, the DIA, the DoD, the Army, the Marine Corps, the Air Force, the Army, interagency partners, probably other agencies out there, alphabet agencies like maybe the FBI, CIA, or FBI, DEA, et cetera, right? So they're implementing this stuff, right? IRS right? This will be the part that gets scary. If Palantir is implemented at the IRS level, that will be very, very scary for a lot of people. But again, I don't know how that will turn out because there's a lot of wealthy people who know how to use tax loopholes, et cetera, or basically commit fraud. And I don't know if Palantir will be used at that level. It has been used, again, in the mortgage industry, and it was able to detect fraud or catch fraud within 3 hours versus what it took, a room full of analysts to find over a couple of months. So again, my thesis was that Palantir was going to be that company, that it was going to continue getting new companies, going to be adopted commercially, which it's starting to. And that was the thesis. What would change, right? What would tell me to get away from Palantir, sell out of Palantir, et cetera. One is probably Karp leaves, right? Because I like Alex Karp. I like that he's an outspoken, basically critic of everything, right? He's very he's not skeptical. Not pessimistic either. I don't know. Like Alex Karp is just a freaking really smart guy. Even though he's very fidgety, very like high energy type of vibe. But I like Alex Karp. I like what he stands for. So I like the founder, right? Or not founder, but I like the CEO. Then you have the management team, right? And then you have the software, the product, the service, and their customer base, right? If anything was to change with that, those things, right? Let's say we get, and I'm gonna just speak out loud here. Let's say we get like some independent president that wants to cut the defense budget by a lot, right? Wants to cut it. Could Palantir be on the cutting block, right? If this incoming president administration says that they want no wars, they want to reduce the defense spending and all this other stuff, then yeah, maybe I would probably think or consider about getting out of Palantir at that point, right? But my thesis for these next couple of years is that there's going to be a lot of defense spending. So Palantir is going to be a benefactor of that. And we already see that. We already see that is happening. The price is not obviously reflected. It's very expensive. Right now it's going down, it's trending down. People saying that it's way too overvalued. It's a meme stock, et cetera, et cetera. I mean, everyone's entitled to their own opinions, but my thesis, unless something changes from that, from what I kind of already explained, that would be the thing I would, that's when I would get out of, a Palantir or a Palantir, ETF, right? So I hope that answers that question. I know that was kind of long-winded, but yeah, that's that. And another thing is like, with your portfolio, like when does it make sense to cut something, right? That's a really good question, right? When does it make sense to cut something? And the answer is, in my opinion, for me, when the thesis no longer makes sense, like I've already explained. But two, you found either probably a better product or something else that is that is beneficial, right? And this ETF or this stock, whatever, no longer serves a purpose in the portfolio. I hate to say this because for one, I do it a lot, which I'm trying to get a better handle on. But swapping in and out of ETFs constantly, not a good thing, right? In my opinion, not a good thing. But if that's your thing, if you like trading ETFs, in and out of ETFs. But me, I don't know, like maybe it's the Simple Path to Wealth books, the Warren Buffett books, the Intelligent Investor books, all those books. They say that swapping in and out of stuff, getting in and out, you're basically trading, and your returns, you're harming your overall total returns over the long term. So there you go, right? Of course, like I said, everyone's going to have their own opinion, their own difference of perspective. But that's how I look at it. Let's see. Yeah, I mean, Wolf, pretty much right here. When you no longer believe in the stock or ETF, like the whole blocks thing, right? Like blocks has just been getting absolutely demolished, and people are selling out because they can't take red. They can't take the color red anymore. And they don't, everyone was talking about blocks when it was going up, right? Everyone was talking about that 32% distribution yield, and that, it's always going to pay. This is a great payer. It's got Bitcoin and Ethereum. But when Bitcoin and Ethereum took a turn for the worse, and these mining companies along with it, and these crypto companies along with it, now it's, I'm getting out, I can't take the pain or whatever, blocks is not doing what it's supposed to be doing. It's not protecting to the downside. It's supposed to be hedging and puts and blah, 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 blah. I mean, what changed? what changed fundamentally about Bitcoin, Ethereum, or those crypto mining companies besides the price, right? Fundamentally, what changed? And I think a lot of people buy these income ETFs not fully understanding what they're buying. They see things like Bitcoin and they see Bitcoin going up and to the right, they buy it. And then when it goes down, down to the right, I guess, then they sell out, freaking out at, taking huge losses. So if they're patient and they just weather the storm, they weather the storm, they go through it. Eventually Bitcoin is going to go back up. All right. My opinion, of course, right? Bitcoin will go back up. Yeah. And this is a big point too. Sergio says in and out charges you fees for the transactions double down, right? That's also something to consider, right? The expense ratio for these ETFs. Farouk says when you buy an ETF, you're buying an at the ATM machine. I'm thinking at the money, like strategy. It never stops spitting out money at you monthly or weekly ever. We are in an income producing world. Screw the 4%. I don't believe in the 4% rule. Like really, not anymore. I used to, like everyone was like, oh, just get an index to $1 million. And then you just take 4%, right? You take 4% every year, blah, blah, blah. You retire off of that. I don't know if that's still the case, especially when it comes to the West and how expensive things have gotten. Could you do it overseas and do like a geo arbitrage? Absolutely. I mean, $40,000 a year in like Costa Rica or Dominican Republic or Southeast Asia, or even some of these African countries, Ethiopia to name one, or I think it's Ethiopia is probably the more preferred one, or Ghana. I know people out that way, but anyways, I mean, $40,000 a year USD. I mean, you're living pretty comfortably, right? You're living pretty comfortably. You don't have a whole lot to worry about unless you have, of course, if you're, a family, you got a family, you got, either girlfriend or boyfriend, or you like to go out and, party, all that stuff. Well, all that will come into play, right? Maybe that 40,000 is not really a whole lot, but yeah, I mean, the 4% rule, I mean, it works, but I think I don't know, like if you have $1 million account, 40,000 a year in the United States, I don't know, it depends where you live in. Are you living in a high cost of living area, low cost of living area? Is it a tax advantage account, non-tax advantage account? All those questions come into play. Nothing. People forgot that blocks is up 45%. Lest we forget, huh? Hey, we just selling out of blocks now, right? All right, ladies and gentlemen, I've been here for about an hour and a half, and I am starting to feel I'm starting to feel sick, like really, like I can feel it starting to manifest itself. I definitely need to get some meds or something. I hope to stream tomorrow. All right, I will keep everyone up to date on that. But we covered so much in the stream, guys. I really do hope you guys found some value. We covered a lot about Bitcoin, a lot of buying of Bitcoin or IBIT, the smart money. My biggest message in all of this, be aware of what's going on. Be aware of the noise and the actual signal. Okay. You can let's see what's on my feed right now. Let's just see what's on my feed. Shout out to the one guy on X viewing this video. Let's see. I don't know. I'm going to just put an MSTR and see what happens. Let's see. There's probably a lot of good news now. Let's see. Latest. Yeah. That's bad charting. There's more questions. Let's see. I don't know. It looks like everyone's has good news now. But yeah, especially on X, right? On YouTube, same thing. Just be careful when people say things. Always fact check it. All right. Always look on Google. Google makes it so easy now, right? You have Gemini. You can double check this information to make sure it's not made up. You want to absorb more signal in your brain than a lot of noise, because there's just so much noise out there. So much noise. And it's there to get you to sell things, right? There's good signal and then there's noise, right? And that's really what I wanted to cover, or the main point of this whole stream was to cover at least that. Anyways, guys, that'll do it for me. All right, we covered a lot, and I do appreciate you guys joining me for this stream, joining me for this evening and this coffee hour. As always, I appreciate you guys. With that being said, I will see you guys in the next stream. You guys have a great evening, a great rest of your night, or a great rest of your day, wherever you are in the world, and I will see you in the next one. Take care.